Max Keiser predicts Bitcoin price to soar and surpass $100,000. Max Keiser is a well-known Bitcoin bull and maximalist. He has been a vocal advocate for Bitcoin since 2011, and he has predicted that the price of Bitcoin will eventually reach $100,000 per coin. Keiser has been critical of the traditional financial system, and he believes that Bitcoin is a superior form of money. He has also argued that Bitcoin is a hedge against inflation and economic collapse. In recent years, Keiser has become increasingly involved in the Bitcoin community. He is a co-host of the Keiser Report, a financial news show that focuses on Bitcoin and other cryptocurrencies. He is also the CEO of Keiser Media, a company that produces content about Bitcoin and the financial system. Segment 1: The Driving Forces. Before we dive into the nitty-gritty, let's talk about the driving forces behind Bitcoin's price movement. From institutional adoption to technological innovations, it's all part of the game. Institutional adoption. In recent years, institutional adoption has emerged as a game-changer in the world of cryptocurrencies, and Bitcoin has been at the forefront. Traditional financial players, from major investment firms to publicly traded companies, have started recognizing Bitcoin as a viable asset class. Their involvement brings increased legitimacy and liquidity to the market. When institutions allocate funds to Bitcoin, it not only drives up demand but also signals to retail investors that Bitcoin is here to stay. This influx of institutional capital has the potential to create a bullish momentum, pushing the price higher as supply and demand dynamics come into play. Technological innovations. Bitcoin's underlying technology, blockchain, has continually evolved since its inception. Segregated witness, SegWit, Lightning Network, and Taproot are just a few examples of upgrades that have enhanced Bitcoin's scalability, security, and functionality. These innovations address previous limitations like transaction congestion and high fees. As Bitcoin becomes more user-friendly and efficient, it attracts not only investors but also users interested in its utility as a decentralized digital currency. Technological advancements keep Bitcoin relevant and adaptable, bolstering its value proposition and fostering investor confidence in its long-term potential. Macroeconomic trends. Bitcoin's meteoric rise is often associated with its status as digital gold. In an era of economic uncertainty and unconventional monetary policies, Bitcoin offers a hedge against inflation and potential currency devaluation. When traditional markets face turbulence or when central banks engage in massive money printing, some investors turn to Bitcoin as a store of value and a potential safe haven. This narrative gained traction during the global financial crisis of 2008 and has persisted since. The macroeconomic landscape and global financial conditions can significantly influence Bitcoin's price as investors seek alternatives beyond traditional assets. Segment 2: The Regulatory Roller Coaster. But wait, it's not all sunshine and rainbows. The regulatory landscape can be a wild ride that can either catapult Bitcoin or send it crashing down. Regulatory uncertainty. The regulatory landscape surrounding cryptocurrencies is far from settled. Governments worldwide are grappling with how to classify, regulate, and monitor these digital assets. This uncertainty creates a volatile environment for Bitcoin and other cryptocurrencies. At times, regulatory news can send shockwaves through the market, resulting in rapid price fluctuations. The lack of clear guidelines can deter institutional investors and even ordinary users from fully embracing cryptocurrencies. Investors often closely monitor regulatory developments as they can drastically impact the trajectory of Bitcoin's price. Global coordination and impact. The decentralized nature of cryptocurrencies poses challenges for regulators seeking to create a consistent framework. Different countries have taken various approaches, from outright bans to embracing innovation. The lack of global coordination can create disparities in regulations, leading to arbitrage opportunities and uneven market dynamics. Bitcoin's price can be influenced not only by the regulations of individual countries but also by how these regulations interact on a global scale. The push and pull between various regulatory approaches create an ever-evolving environment that traders and investors must navigate. Segment 3: Economic Ecosystem. Bitcoin's emergence as a digital gold and store of value has sparked immense interest in the financial world. In times of economic uncertainty, investors seek assets that can preserve their value. Bitcoin's fixed supply and decentralized nature make it an attractive option for those looking to hedge against traditional financial risks. Inflation hedge. One of the key drivers behind Bitcoin's appeal is its potential to serve as an inflation hedge. As central banks print more money and inject liquidity into the economy, concerns about currency devaluation. So, what's the verdict? Will Bitcoin skyrocket to $100,000 in 2024 or stumble along the way? The truth is, no crystal ball can tell for sure. The crypto realm is a wild ride that even us content creators can't predict. Don't forget to subscribe our channel.